Welcome back to the channel, everyone. This is Frankelley Nunez, and today we're going to talk about debt to income ratio. What is it? How do you calculate it? And how can this benefit you when buying a home? There's different strategies that I'm also going to talk about. And for more real estate strategies, make sure you subscribe to the channel and click the bell icon so I can walk along with you on your real estate journey. With that being said, let's jump into the video. So what is debt to income ratio? Debt to income ratio is the difference between all your monthly debts versus all your monthly income, gross income that you're making every single year. So let's say if you make a salary of $70,000, that is your gross income for the year. You divide that by 12 months, and that would be the amount that you would have available as income for that debt to income ratio. The debt is all the accumulated debts that you have or monthly obligations that you have for financial companies. It can be your student loans, credit card payments, your car payments, personal loans, any other loans that are under your social security number. That is your monthly debt, and that is the debt to income ratio. Now, when looking at the debt, let's say credit cards and car payments, they don't look at your actual total balance, they look at the monthly obligation. So if you have a credit card that is $1,500 on it, but your monthly payment is only $25, then that's what will be factored into that ratio. Now, that ratio is important when financing because a lot of loans look at that to see if you would qualify. So let's say for a FHA loan, if you're buying your home for the first time, or you want that product, then you have an availability up to 50 to 55% debt to income. What that means is if your income per month is, let's say, $4,000, then the max that you can have in debt obligations is $2,000. That is including the potential loan. So let's say you're buying a house for $250,000, then, and that mortgage payment is going to be roughly $1,500. Then that leaves you from that $4,000 to the $2,000, only $500 left for any other obligations. So student loans, credit cards, and car payments. Now, that is for FHA. There's different loan products out there. Usually a good healthy DTI would be from 43 to 45% debt to income. FHA allows you to do a little bit more, but you have to check with the different lenders because those thresholds change every single year. Now, other strategies that are out there is if you let's say have a spouse, right? So if you have another social security number, another person making income, and they you guys share everything, you have cars, you have different things that you're financing, it would be advantageous if the other person is not going to be on the loan, that they will hold most of the debt because you can qualify for more home, especially if you're doing like an investment property. Now, make sure you can afford the payment regardless, but if you want to clear up some more DTI, and let's say you have a car note, if you can refinance the car note and put it under your wife's name, or if there's different ways to just reallocate your debt, then you can free up most of your ratio to purchase the next investment property. Always consult with a lender to make sure that you're not overextending yourself. Make wise decisions, but this is a way that I've seen to make deals work, especially if you're looking to buy investment property. Another way to leverage other resources is by using your business. If you have quite a bit of business expenses and you are, let's say, for example, I'm a realtor, I have a credit cards that are under my business name. I have different expenses that I can write off through the business. Mind you, you have to make sure that everything's by the book, especially for bookkeeping and all that. I have a business vehicle. This car, this Tesla, is a business vehicle, and I'm using it for business right now, actually. But it is a vehicle that we use every single day, personal and business. So that debt, I have it under the business name and it doesn't show up on my personal. So if I want to buy something personally, it does not impact it. I hope this was helpful to you to know what DTI is, and also different strategies that you can use when you want to free up a little bit of the DTI without overextending yourself. Make sure that you make wise decisions when using these strategies. If you need more information or you want to understand different ways to go about a deal, feel free to reach out to me. I'll put down the link to my website. You can fill out the form and we can get in contact. And I'll see you on the next one.